a model of stability, a model of predictability, a model of reliability. Any long-term investor seeks these characteristics in the stocks they buy. It is investing on easy mode because you just know that each quarter will deliver more growth. Any stock that delivers this to investors should have a foundational place in the portfolio. And one stock does just that. This business is an investor's dream. All it does is deliver growth in capital to its investors with almost no down years. Well, after another rock-solid quarter of double-digit growth, Visa, ticker V, did it again. Welcome to the Quality Investor. It's no secret that Visa is one of my favorite businesses. It is just a perfect example of what to look for when buying individual stocks. Compound growth, incredible margins, low capital reinvestment, capital return to investors, a long runway of growth, and a wide economic moat. Visa has all of this in spades and demonstrated its market strength yet again this quarter. Visa is up 12% on the year and is now poised to go on a nice run to finish out the calendar year of 2024 after closing its fiscal year of 2024 strong. Visa climbed a modest 3% the day after its earnings release, but that seemed to be capped by an overall down day in the market. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. Aside from delivering beats on both revenue and earnings, the growth was again driven by organic factors. These factors included growth in payment volume and total processed transactions. Once businesses grow to the size of Visa, it's easy for them to justify using their massive excess cash to acquire other businesses, to grow through acquisition rather than organically. And while it does some of that on a very small scale, they instead use their excess cash to pay its growing dividend and buy back its shares. In short, reward shareholders. So let's dive into their earnings release that closed out another robust year of growth for Visa. Today, on Thursday, Visa closed out the day at $289.85, only down 0.11% on the day. You can see they popped early, flirting a bit with $296, but the day of suffering in the markets today dragged Visa down along with it. I mentioned Visa as a model of consistency, and every year they continue to deliver on that. Net revenue up again 10% year over year. Earnings per share up 17%. It seems like every single year they're growing revenues by at least 10% and earnings per share by like 15 to 20%. I also mentioned that we like to see that organic growth. And again, that's what they're doing. 8% year over year increase in payments volume and a 10% increase in processed transactions. And that's how we want to see Visa grow. You can see that trend line slightly up over the quarter here for processed transactions. Processed transactions are how many times people just simply swipe their card. And Visa collects a fee on every single one of those swipes. And that fee is a percentage of the payment volume. And you can see that nice growth here throughout the quarter on the payment volume growth. Now let's compare that to last quarter. You can see the payment volumes here, while they grew, they didn't grow nearly as fast as they did this quarter. In fact, they were trending down by the end of the quarter. And same with processed transaction growth. Hovered around that 10% and then ultimately trended down by the end of the quarter. Whereas this quarter, you're seeing that rebound in growth a little bit. People are increasing their spending, and Visa's metrics are showing that. So an improving economy only means good business for Visa. They're also doing a good job of growing the total number of cards that they have in circulation. You can see now at 4.6 billion total cards, a combination of credit cards and debit cards. The more cards in circulation, the more chances people have to swipe that card and pay Visa that fee. You can see that 10% revenue growth here, year over year, 35.9 billion versus 32.6 billion last year. And the operating income, it came in at 23.595 billion compared to 21 billion last year. But more importantly, the margin this year for operating margin was at 65.7% compared to 64.3% last year. So over a 1% margin increase. And that's what we want to see our businesses doing, increasing their margins. Increasing margins is ultimately what leads to better free cash flow. And speaking of free cash flow, their operating cash was at $9.9 billion, actually down from last year at $20.7 billion in the prior year. And that's despite an increase in income of over $2 billion. And it looks like the main culprit of this decrease in operating cash is the fact that they paid off some of their accrued liabilities. So basically improving their working capital position, which is never a bad reason to see declining operating cash. However, they did spend a little bit more on their capital expenditure in 2024 than they did in 2023 at $1.2 billion, up from $1 billion in the previous year. So they did come in at a slightly lower free cash flow in 2024 compared to last year. In fact, the free cash flow went from about $19.6 billion last year to $18.6 billion this year. So a $1 billion decrease. A little hiccup in the free cash flow is never too big of a deal to worry about as long as it's not a massive drop off or anything like that. And we don't see that trend continue into the future. But they did use that free cash flow to repurchase stock yet again, $16.7 billion in stock repurchases in 2024. And then $4.2 billion paid out in dividends. And speaking of the dividend, they just increased their dividend by another 13.5%, now at $2.36 on the year compared to $2.08 last year. So more robust dividend growth, 10% plus dividend growth, massive inflation beating dividend growth from Visa. And I've mentioned in videos before that I think Visa is one of the best dividend growth stocks that you can buy. But with the nice gain that we saw in the market the last couple of days with Visa up to almost $290 a share, is it worth buying right now at this price? Overall, Visa closed out their fiscal year very strong. They came in slightly ahead of my estimate for revenue by over 1%, same with my operating profit as well, and had an incredible 66.9% margin on the year. Net income came in at over 4% better than what I had expected, with a 55% margin, an incredibly profitable business. Earnings per share was slightly ahead of what I expected as well by over 2%, a 17% increase year over year. And in fact, we saw a slight decrease in overall free cash flow margin at about 52% here for the year, compared to about a 60% free cash flow margin last year. And as always, Visa's revenue top line growth always very steady between 8 to 11% every single quarter, always coming in about 10% growth per year. So really not a lot of adjustments needed to be made for my next 10 years of estimates here. I just think that Visa is just such a great example of an incredibly predictable business with such a simple business model that it borders on just boring in terms of what their earnings are every single quarter. So by year 10, I'm estimating operating margins to get out to about 69%, net margins to be about 54.35%, and free cash flow margin to be about 58.7%. My year one revenue growth here is at 11.31%. That's based on what the company itself and a few analysts are estimating for next year's growth, and an operating margin at about 68%. So I'm pretty much estimating operating margin to stay pretty flat for the next 10 years. Their operating margin, for example, has pretty much hovered between 64 to 70% over the last 10 years or so. And free cash flow margin has bounced between 50 to 60%. So there's not a lot of huge growth in margin expansion. And ultimately, in year one, I have about a 4% year-over-year growth for free cash flow. Over the next 10 years, I expect about a CAGR of 8% for revenue, almost 8.5% for operating income, same with net income, 11.5% earnings per share growth, and that's given about a 2.5% share repurchase per year, and free cash flow growth at just under 8%. In fact, you can see my free cash flow margin by year 10 is at 58.7, which is actually a slight decrease from where they were at fiscal year 2023. So again, I expect the margins to remain relatively flat through the next phase of Visa's adventure. One of the great strengths of Visa is their dividend. While it is a low yield at under 1%, to me it's the definition of a dividend growth stock. They just increased their dividend by another 13.5%, and it'll be $2.36 per share for 2025. Ignore the year headers here. The year's data has not updated yet in my data model. But as you can see here, they've had great growth over the last 10 years in their dividend. 10-year CAGR of 18.5%. The free cash flow payout ratio is also an incredible 21.6%. So there's a lot of room for that dividend to grow at 10+% every single year for a long time to come. And I have that year-over-year growth at about 13%, ultimately giving us a 5-year CAGR of 13.09%, and at a perpetual dividend growth rate of 7.12%, that gives us a dividend discount model price of $308.86. And you can see here, with even growing that dividend, and even growing the dividend at 13% per year, based on my modest free cash flow projections, barely moves the free cash flow payout percent, 23% free cash flow payout estimate by year 5. In my opinion, I'm actually being very conservative on the type of dividend growth we'll see from Visa over the next few years. No doubt, in 9 to 10 years' time, Visa will be a valued member of the Dividend Aristocrat Club. So is Visa worth buying after the nice little bump they had post-earnings? Well, they closed out the week at $290.74. And based on my discounted cash flow prices here, the bear case is at $233.47. And that's at about a 56.3% free cash flow margin by year 10. $292.97. And like I mentioned before, at about a 58.7% free cash flow margin by year 10. And a bull case of $359.21. And that's with a 61.16% free cash flow margin. The dividend discount on the bear case is $262.16. Here, I'm assuming about 12% dividend growth over the next 5 years with a 7% perpetual growth rate. $308.86 on the base case. I already showed you that for the base case. And $371.40 on the bull case. And that's at about a 14%, which I still think is very conservative. A 14% growth rate on the dividend over the next 5 years with a 7.25% perpetual growth rate. The exit multiple comes in at about $275.36, and that's using American Express and MasterCard as the comps. So when it's all said and done, all of this comes out to a current buy price of $294.37, meaning at about $290, Visa's priced just about right now. With a 10% margin of safety, which I think is fine for a company as safe as Visa, it's a $264.93 buy price, which is what they were trading at just a few weeks to months ago. That would be a forward PE of 26.9, which is just under what their 10-year average is right now. So while I no doubt think that Visa would be a steady compounder over the next 10 years, for me, it's best to wait a little bit before they come down below 265 before buying a little bit more. And the thing is with Visa, there's a lot of opportunities where that happens. Investors tend to get very worried about recessions always right around the corner, and that tends to push Visa down. On top of that, Visa has been facing some scrutiny in the legal department, which has also exhibited some downward pressure on their price. However, Visa always seems to come out on top and in the long run prevails. And I think that's exactly what's going to happen here. In the long run, we're going to continue to get great returns out of this business. But along the way, there will be some nice buy opportunities when it dips based on negative market sentiment. But as always, Visa is just such a great business. You can look at that incredible return on invested capital, 31%, way above its 5 and 10-year average, driven largely by these massive margins. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.